All right, well, I'm gonna kick this off. If anyone else filters in, we can welcome them then. But welcome again to another Crypto CFOs Presents Water Cooler Wednesday. Today we're going to be talking about client intake checklists for crypto tax clients. This is a huge kind of pain point for a lot of CPA firms, especially those that are just getting involved with digital assets. It's, what questions do I need to be asking my prospective clients, and to ensure that I have completeness of data, to ensure that I've covered my own ass as a practitioner, to say that, hey, I've asked them about all of their wallets, and this is them kind of signing off on the fact that they've given me all of the sources and all of the information that I need. And then also, you want to get your clients the best picture possible on a scoping issue. So if you scope out a return based on 3 sources of data, and then throughout the process they somehow find a way to discover 4 more chains and 5 more wallets or whatever, something like that can significantly change the scope. So here at least you're incorporating it into your processes a documentation of some sort of scope as well, filled out by the client. So the goal here today is to kind of workshop what we created last year in the community, to see if maybe we want to adjust or add anything, determine kind of like what are the key questions and items that we want to be getting from our clients, and then also maybe some tools that can aid in the process of tracking down stuff that might have been originally left out by the client. Those are the kind of main topics for today. So I'll pull this open and we can start to discuss it. This is what we created last year, as I mentioned before, as a checklist, and we'll start there and we can work from there. All right, here we go. So this is available in our library section of the community as well, by the way. So the first question we ask clients is just asking them about allowing us to acquire their transcripts. So very standard. A lot of this stuff will be standard stuff that will be good across the board. But then, once we get into one point, once we get into the next couple of questions, we start to get more digital asset heavy. So if yes, we require the 8821 to be authorized. But question number 1, did you have any crypto assets prior to 2019 that you still hold or have disposed of since? So we're asking people to describe them. I got something in the chat. Let me pull that open. So here, I think that it's important to understand how far back someone's history goes. I think here it might be better to have, when did you first purchase crypto assets, and have you been reporting since, every year that you've acquired since you've acquired?
The reason we put 2019 prior to 2019 is because they didn't have the virtual currency, which is now the digital asset checkbox, until 2019. So we're trying to see if they had anything before they had to check the box.
Okay, cool. That makes sense. So yeah, so there's a reason why the 2019, I was confused as to why we were specifying the 2019 date, but that makes sense. So we'll obviously update question 2 to include for 2023. And we're just basically asking the same questions that the IRS asks in that checkbox, but we want to identify, like, as we pull the transcripts, were these boxes actually checked after this happened? And were digital assets actually reported on these returns if the client is now telling us this? Because as we know, a lot of CPAs were, and still are, hesitant to take this on, or if they take it on, they are taking it on because they think like, oh, I'm just going to report the 1099s or the information on the 1099s or whatever. So we want to make sure that this was done properly in prior years. So this is kind of us saying yes or no for each year, and then what, like a brief explanation as to what type of activity they had. Did they have airdrop income? Did Did they sell or exchange their digital assets? Did they dispose of them? Did they purchase something with them? So I think that, these are really important to get a baseline of where the client is at, because if we see a disconnect between what they're telling us and what was reported on those actual transcripts, we can start to discover more about the full picture here. And, potentially there's in gathering this information, there may be potential for them to have either underreported or unreported crypto assets, and may kind of indicate to us that they may be receiving a CP notice at some point from the IRS, right? Or kind of get proactive about filing stuff that wasn't correctly filed, right? So now we want to provide a complete list of, for each corresponding year, the wallets and the exchanges that people had. So I think we should expand on this in this year to create more space here, so that we can have, like, by year, and then also a lot of space for wallets, because someone who's actively trading is going to need to have, they're probably going to have, they could have upwards of 10 wallets, 20 wallets, depending on how many chains they're active on. So I want a list of what chains are they active on, what are all the wallet addresses, and if it's one wallet address across all EVM and they're on 5 different EVM chains. So I'll break that down for people who are newer to some of these terminologies. So when you mint an Ethereum wallet, it also locks in that same public key address on all of the, or on a lot of layer 2s and EVM compatible blockchains. So like Polygon, if you had minted a wallet address on Ethereum, you would have that same wallet address on Polygon, on I believe Optimism, and other chains as well. So we may not necessarily need, like, okay, we would just say the wallet and then what chains it's active on, maybe. So we'll kind of like restructure this so it's a little bit easier for the client to plug in their data, right? And then we also want to know any exchanges they've been a part of. And this isn't just for this 1 year. We want to know for every year, because we want to make sure that if we're missing cost basis data, it may be from 2017 or 2013 that, if they're into Bitcoin, that they received these assets. Now, if someone received Bitcoin in 2013, the effect of that cost basis is going to be minimal, depending on how big of a whale they are, because Bitcoin has gone up so much in price. But we still want to have complete data, and we want to know that we're working from a complete data source. This also kind of keeps our clients in check, because we're going to scope this project out based on this checklist. And if, like I said before, if they come back to us later, or we discover that there's missing wallet addresses, that's going to increase the scope, and it gives us a footing to bring that back up to the client. Say, hey, you only reported to us that you had 10 wallets, but we discovered that you likely have another 5. It's going to be X amount more because we weren't aware of these wallet addresses. And so that's kind of where we get the completeness of the data set. A really great tool that we're actually incorporating into the community soon is I won't reveal the name yet because it's coming soon, but you will be able to soon in this CryptoCFOs community plug in a wallet address and see any of the chains that it's active on. So this would be a way for you to take any of the wallet addresses that the client reports and just verify that they've told you all of the chains that they're active on. And they may be active on certain chains where it's really just someone sent them a bunch of airdrops, so they didn't actually truly have activity. So we don't want to include that stuff, but it'll show you any chain that they have activity on. As the question 4 gets into accounting method for these digital assets. And so here, because you can elect this per digital asset, I kind of want to word this question a little bit differently, because people may be under the impression that if they selected spec ID for Bitcoin, that applies to all assets, and you have to elect asset by asset.
And you can change year to year too.
And okay, okay.
So could we do like check boxes, like check all the adopted accounting methods, and then maybe we could
Yeah,
follow the
so
client?
maybe we have lines, maybe we have like 10 lines for different assets, and we have a checkbox next to it, like 3 checkbox where there's FIFO, LIFO, or spec ID or other. And then we leave a line for the other. And then that way, if someone has more than 10 assets, we'll have them format it in that way. So we'll just follow up in those events. But then this at least gives people space to identify what accounting method treatment they've used in the past.
Yeah,
Gotcha.
most of them won't know though, unless they did some of the reconciliation themselves.
Yeah. Yeah. So this may be something where you have someone start to fill this out, and then depending on how you work with clients, maybe you hop on a call with them to walk through and explain some of these, because we're pioneering in a new industry, so there's going to be more client education work than there is in other industries. So I think it's a really important thing to note.
Real
So
quick on that.
yeah,
Is it common for, excuse me, is it common for investors to have the multiple different accounting methods for like you're saying, like Bitcoin could be addressed one style, one way, and is that a common practice or?
normally people will have, like, they'll use spec ID, or I mean, so sorry, spec ID isn't going to be normal, but like if they've chosen one, they normally will have chosen that across the board, because like if you use a crypto tax prep software, they will, like, if you start using that starting point, they generally will have you select like a method that you want to use in there, and it'll apply it across all of the assets.
Gotcha.
So you can select it, but the vast majority of people are going to have like one method that they use. Someone who's more savvy may have different methods for different assets based on what activity they had.
Okay.
But to answer your question, it's going to be more common that someone's going to have all the same.
Well, maybe
but-
it changes year to year. They could say in 2019 I did it this way, and then maybe.
Yeah, the challenge with that becomes if you used FIFO one year, it's hard to tell that to a software that you switched back and forth,
Okay.
because you don't want to double up using basis where it was already used in a prior tax year, because that's a big no-no. So there might be a way to do it in a crypto tax software, but I'm not sure of how to do that. So I would try to avoid that with my clients. You would want to stick with one, and if you're doing one, let's stick with it, kind of thing. So that's kind of how I would handle it. Question number 5: did you have any crypto assets staked during the tax year? Here I would just add, stake. Did you do any staking activity or yield farming or anything that's like kind of falls under a similar umbrella? For those who are unfamiliar, like a yield farming is when you lock an asset up as collateral and you don't earn in that asset, you earn in a different unrelated asset. So that's the only difference between staking and yield farming. You're locking up your assets in both instances, but the rewards are from staking are in the currency that you staked, versus yield farming, it's in an unrelated third asset. Very popular example of this was Pancake Swap. You could stake different assets and you would earn like a crazy yield in their cake token. I think it was like 90% at one time. So it's a way for them to have you lock up liquidity so that you're earning this ridiculous yield somewhere else. But we can discuss yield farming another time, but in more depth. But here I just want to identify that I just want to highlight that, do you have anything? I just want to expand this question so that it encompasses yield farming or other. I think we want to just do staking and yield farming in this question, and then we'll ask a separate question about, did you post assets as collateral on any decentralized applications? Did you provide liquidity to any decentralized exchanges? Those will be separate questions that I think we can add in here as well.
What about activities in DAOs? Like if someone's involved in a DAO?
Yeah, definitely want to ask about if they participated in a DAO, because we had a whole talk about that at CTAC about how you could have some tax implications there depending on the nexus. So yeah, those I think we may have maybe further down the question about DAO participation.
Okay.
But I do like having in this same section, like 5, 5.1, 5.2, you know, LP token, you know, did you provide liquidity to any protocol, to any decentralized exchanges? Did you post assets as collateral, or have any other kind of more advanced DeFi activities? Because here, if you're getting into a client that has a more advanced DeFi activities, you can start charging more because this is more and more complex stuff. And so you can have a, you know, you can start to build out a threshold to say, like, if a client is just on one centralized exchange, it's going to be really easy because if they've only ever interacted with that one exchange and they've only bought and hold and maybe sold a little bit here and there, the 1099 you're still going to want to verify it, but it's probably going to have pretty accurate information. So it's not going to be nearly as complex as it gets into when you have a client who has DeFi activities. That should automatically be an additional charge. And then you should have different thresholds for how many transactions, how many chains, and things like that. So I won't get into how people should be pricing their services, but I think that it's important to understand the differences in complexity as we get down this rabbit hole to understand, like, you don't want to be shortchanging yourself on these, because if you get into the weeds on a client that has a lot of DeFi activities, it could take you, if you're new to this stuff, it could take you 40 hours with that one client. So you want to be charging accordingly. So again, just another aside on that. So we do actually have a lending and borrowing question here still, but I'm jumping ahead of myself. You know, did you receive any gift or donate to any charity during the tax year? So for this, we want to also confirm that someone has a certified valuation of this, right? Because this is the new requirement. You have to have a valuation of these from an independent third party. If you need help with this stuff, we have some people in the community that do valuation services. I know Technos Associates does this. So you can contact Casper Schouten about that. But I think that's how you pronounce his last name. I'm sorry, Casper, if I'm butchering it. But for donations or gifts or things like that, you have to have a valuation of these assets. And so making note of that here in the questionnaire as well, I think will be helpful and important to understand. Because that could be another service that you could offer to clients. You could offer them, you know, a white label valuation. Maybe you strike a deal with a company that does this stuff and you have them do it for you without your client even knowing that you're outsourcing it, right? But again, another thing that you can charge for. So we have a description of that stuff too. So I think lending and borrowing is another question we want to keep on there, and then just add in something about after this, we'll add in something about liquidity pools. A simple yes or no, right? And then briefly describe. So here we're asking about compensating people. So this is more from a sense of, like, do we need to issue, is this a business? Do we need to issue 1099s? It's also a disposal, right? If you're paying someone an ETH, you're selling it. So we have to track that as a, we have to track the capital gains related to that. And then we also have to determine whether they were contractors or employees. So do they need W-2s or do they need 1099? So here we talk about the 1099s for non-employed compensation, and then miscellaneous. And then, so here we start to get in, you know, is this person maybe qualified for 475F, right? So are they spending substantial time trading crypto assets in pursuit of producing income, right? So if this is a 470F, if this is someone who may benefit from 475F, we want to try to identify that here. Brian, can you, I don't know how familiar you are with 475F. Can you talk to that a little bit about what it does?
It makes it so that if you elect it the year ahead, in the following year, you're going to treat all of your your crypto assets as inventory that's disposed of on December 31st. As
So
a
you mark to market basically.
yeah, exactly.
Okay. So that could be advantageous to some of your clients. So it's important to identify that. And you could also maybe potentially, we've seen cases where CPAs have been sued where they didn't present this as an option to their client, because it could have saved them a lot of money in taxes. And it's your duty to identify this as a potential strategy for your client if they are trading actively in the pursuit of producing income for a livelihood. So really need to make sure we're asking these questions. There are IRAs that offer you to purchase crypto, and especially now, we should add something in about the ETF because there's some additional tax implications about being involved in the ETF that we got into on one of the calls during CTAC. So if you missed that, check that out when we upload those videos from CTAC. But the ETFs have a whole other tax implication here. So we do want to know also if someone has a crypto IRA where they're holding actual Bitcoin or ETH or whatever. But in addition, we want to know whether they're holding the ETFs. And again, the custodian, and briefly describe that aspect of it. So, did you have any off-chain transactions? So another key thing here, you can go to a Bitcoin ATM and you can withdraw Bitcoin. So that's still a sale, right? Bitcoin to cash, even though it's, I mean, it's traceable on chain, but, or if someone, they on-ramped fiat to crypto via an ATM, or they just gave someone cash and that person sent them Bitcoin. Those types of items would be off-chain transactions where you purchased Bitcoin with cash and then they sent it. That them sending you the Bitcoin is on chain, but that address now is completely unidentifiable on chain. So we want to be asking clients about this stuff so that we capture all the wallets and all the activity that existed. So yeah, we'll have the client elaborate on any of that stuff as well.
So I had a few other ones that I'm not sure if they would appear on here. What about if the client has sold any NFTs, which would obviously bring some sales tax implications?
Yeah. So that's yeah. We should enter in some questions about NFTs because sometimes people don't realize that NFTs are crypto. I mean, I know that anyone involved in this call probably I mean, understands that they're related to blockchain and digital assets, but the client may not know to tell you about NFTs, right? They may not realize that it falls under the definition of a digital asset. So, and another thing to be aware of is NFTs could have the collectibles tax pinned to them depending on what the underlying asset represents. So yes, really good point, Brandon. We need to bring up a question about NFTs.
Because I also think too, like initially you think of like, did you sell any NFTs? My initial thought would go to, well, I'm not a developer. I don't have a collection that I own or anything like that. But if at any point I sold my XXX, whatever it is, NFT, I'm selling an NFT, so it's like,
Yeah.
it would still be part of that. So
yeah. So I think we should have one question about like, do you hold or are you a creator of NFT? Oh, well, two separate questions.
Yep.
Are you involved in NFTs? And then as a creator or an investor, just so that we're identifying this and we're asking about it, and did any of I think that the NFT thing, you have to kind of have a more in-depth discussion about each individual NFT with the client because of the collectibles potential. And it doesn't need to be NFT by NFT, but just like collection by collection. Like I would think that something like CryptoPunks, for example, I would consider that a collectible because it's extremely rare, they're extremely valuable, and they're all differentiated. People hold them for long periods of time. I think that CryptoPunks, those NFTs could be considered collectibles, right? And so, but we don't have to analyze CryptoPunk 71 versus CryptoPunk 1400 because they're going to have that same, however we decide to treat that one, it's going to apply to the whole collection.
Okay. My other question would be real world assets. Is that something we would want to, like if they had any tokenized real world assets of any type?
Definitely. Yeah. I think that would come up in, yeah. So if they have like tokenized real estate, um, that would be, we did another discussion on this at CTAC. So take a look at that one. That was put on by Anomaly CPA. They basically said that while it feels like you're holding a digital asset, what you're really holding is a, equity in in real estate. And so everything that comes with the tax burden of that comes with that NFT. And so you're looking through to the underlying asset to deal with the treatment, but it's important to identify whether they have that. I don't think it's going to be very common, but it is a question we should be asking. Yeah. Because there's not a lot of venues to do it in a formalized and recognized way by the U.S. government in different states, and the different state governments. I know that there are some companies that are doing this, but it's not like at the adoption level where I think you'd see this often. But
Mhm.
important to ask because it's a very different treatment.
Got it. Did we
Um,
discuss mining anywhere? I don't
We
know if
did
we
not.
did.
So mining is another thing we should add in here as well. Yeah, mining activities because I think mining is going to be less and less of a like a person like what an individual is going to be capable of doing as Bitcoin continues to scale. But there are other proof of work networks beyond Bitcoin that have mining activities as well. So very important to ask that as well. We should have something about mining on here as well.
And then
Because
my last
yeah.
issue would be online like gambling. Like if there was any
Mhm.
wins like that, like
Yeah. So we should have a checkbox,
or
did you
gaming,
interact with any
gaming,
online gambling websites that you either paid in or were paid out in crypto?
yep, or gaming as well. I guess would fall in that too.
Yeah, GameFi. Yeah.
So
Yeah,
I think now would be a good point, and I'm just realizing it as I'm adding all these on. Like we created this document early last year, and we're already noticing maybe 10 different sections that need to be added in the last year. So not saying this was a concise checklist when we created it, but we're noticing how many more things are happening in the space.
Mhm.
And I think that just speaks to the opportunity.
Yeah. And then just getting into the practitioner guide. So we kind of outlined kind of, and this again, this isn't to be provided to the client. This is just for like the practitioner, like what should they be thinking about and what process should they go through upon intaking that client. Um, and we're kind of describing the process here. So I think kind of taking into account the suggestions that we've changed with the questionnaire, I think that we'll need to update this script, but that's what this script is doing. Um, so I think at this point, I would love to open it up to any questions that people might have or like challenges that they've come up against with taking on crypto clients or any other activities that we may want to add to this checklist.
I think I'd just like to say I think it's extremely important and obviously a necessity when you're dealing with new clients. But I think it also ties into maybe we could put together a small like course section about this because I think it then ties into how do you deliver this information? How do you price based off this information like you were talking about earlier? So it's more than just being able to do the work and seeing what your clients have, but then it kind of determines every step after that process as well. So um, yeah, I think that would be my question. Like how are people delivering this? Is this like a PDF type thing? Is this email? Like what do you I mean, I guess it's
I think that we should make it into like a survey, like a Google Forms kind of thing, so that you
yep,
could input, and then that way it's easier to glean the data off of it, and then you could like in the wallet section, for example, you could like automatically download those. I think that from a pricing perspective, I think that's a really good point, and I think we should do a course on like what we think best practices are, because I do think that as an industry, if we standardize that stuff more, there's less of the undercutting and things like that people do, which I think hurts the industry as a whole because this work does require a lot of expertise and time. And so when you have people like undercutting people, and they may not even know that they're undercutting, they're just trying to like grab clients. But the more you can hold firm on like knowing what other people are charging or having a more standardized way of determining this stuff, I think it benefits everyone. As far as pricing, I think that you can have two approaches to it for your clients. If the client wants to do the work of going through the reconciliation process on like on a crypto tax calculator tool online, like you have your coin leads, you have your coin tracker, cointracking.info, crypto tax calculator, you have a bunch of options. If the client wants to input that data and upload that data and do the legwork and sign off to you that they've everything's been completed, you can then take a look at it with them and analyze, okay, it looks like we're missing basis on, you know, $20,000 worth of stuff. Do you want us to dig into that further? And you could charge a flat fee for filing someone who's going to do the legwork themselves, and then charge an additional hourly rate on the work that needs to be done after the client's kind of done their own legwork. Or you can have a fully kind of like hands-off thing where they just provide you all the info and you do the reconciling yourself, which I think you should obviously charge more for. I think that having two models, because this can get really pricey if it's someone with a lot of trades, you want to give the client the option of like, okay, you can get the benefit of my expertise and I'll review this stuff and I'll make sure that it all looks complete with you after you supply me with the information, but you're going to do the majority of the legwork, or we can do the majority of the legwork internally and it's going to cost you a lot more because we're going to need to go through the process of reconciling this all ourselves. So I would approach it from that standpoint. And I would love to hear from, you know, the firms that are more like seeing more volume on this. I would love to kind of talk to Polygon Advisory Group. They're now Chainworks, I think. Yeah, Chainworks.
I think another part of this checklist too is it'll help you, I guess with any client onboarding checklist, but it'll help you determine what subledgers and tools and other resources that you're going to need, because depending on how intricate and you know how crazy the transactions are and how deep this person is, you may need different subledger platforms. And
yeah, so the different crypto tax calculator platforms, they all have different pluses and minuses, like pros and cons, right? Yeah, like you're describing, there are some that are amazing for like your client has 80,000 transactions and you want to like reconcile them and they're all over DeFi. You may have you will want to use one tool over another one. Whereas if a client has like very limited, like maybe 3 different exchanges, you may use a completely different tool that's going to be cheaper, more affordable. Maybe it doesn't have the same capabilities, but you don't need all those capabilities. So yeah, definitely this is going to determine what tool you want to use. I have seen a lot of firms pushing towards choosing one tax tool for their firm as well, just because it makes it easier for their own internal stuff to train folks to understand how to leverage the tool in the best way possible. So I have seen some firms finding success with that. Other firms just use whatever tools that their clients want to use. So you can narrow down your client pool based on that, or expand it based on which tools you want to work with as well. So I think that those are the kind of from a pricing perspective, I really think you kind of have to have a choose your own adventure with your client. Like, do you want to be doing more of the legwork yourself, client, and providing it to us, and then we review that work with you? Or do you want us to have it in our hands? And here's an opportunity for you to have a more ongoing approach with your clients. If you have your clients and all of their data reconciled through 2020 or sorry 2023 in your database, now you have that client in your tax tool. Throughout the year, you can see, okay, my client just had a lot of activity in this month. I'm going to ask them about these questions now so that I can classify these properly now in slow season and make sure that we're not having to look back and figure out and unwind these transactions down the road. So it allows you more touch points with your clients and more tax planning opportunities as well. I know that there's some tax tools now that will give you suggestions for items that will generate uh, sorry, what's the term when you sell for a loss? It's wash sale rules, but tax loss harvesting. Um, it'll suggest for you transactions that you could perform to harvest some losses at year end. So within these tax tools now, you can provide additional value to your clients by providing them with tax planning strategies throughout the year, helping to reconcile and reduce the load at tax time by keeping up with those transactions throughout the year, and then also suggesting ways that they could harvest losses at year end or be strategic about their capital gains towards, throughout your life cycle with the client. So this industry allows for a lot of upselling. It allows for a lot of additional services to be provided to the client so that you're not just getting that one return per year. You're providing a lot more value here.
I think that could also be presented as like an ongoing monitoring fee, like
Right,
X amount of dollars per month. It would
Yeah.
require very little work on your side. Maybe you log in, every 2 weeks or so for a couple minutes, just take a look at things. But I think from a client perspective, if I received an email from Taylor every 2 weeks, 3 weeks, once a month, just saying, hey, everything's cool. I looked in, checked all your wallets. I didn't notice anything new. Or, hey, you transacted on a new blockchain, or you added some wallets, just confirming that this is good. That whatever that price tag is for you, it provides that continuous, income flow. So it's things that you don't think about. And I'm a big supporter of, get paid for your time, definitely in these complex situations. So those add-ons can go a long way too. And then
Yeah.
it's a double-edged thing because it provides that, like Taylor was just saying, you may catch a mistake before busy season. You may also, it's a form of educating your clients as you go along too, because if this person's, providing you some kind of monitoring fee of some sort, you could send them over some blog posts or some PDFs that you have each month, just talking about anything, and just things that you could automate that'll just say like, hey, this is the process. Maybe when you notice a new wallet's been added, you could send them a PDF on what this means or what that kind of entails, or things that they should report to you. And then like Taylor obviously said too, it's finding these things where it says, hey, maybe you should do it this way, or maybe you should approach things differently. So I love
And
it.
I think that like having a really robust checklist and intake form will help you weed out the bad clients too, because there's so many bad clients in crypto that like they either don't want to pay the price tag or they're super unorganized and they're going to be pissed off with you because they forgot to give you 20 wallets that they didn't realize, and now you're trying to unwind something, or you're showing that they owe $100,000 because you don't have any cost-based information because they gave you bad data. So this process is really important because it helps you weed out the clients that are bad, that are going to waste your time. There are too many clients in this industry to take on bad clients, and so the more you can filter those out, the more profitable you're going to be, and the more sane you're going to stay, because there's nothing worse than dealing with a lagging client that's been like 4 months out because they're just unorganized or things like that. So you're kind of forcing organization onto your clients, and you're forcing, or you're saying, or there's the door, and it's not like you're being a dick about it. You're not being, you're just, this is how we operate. This is how we need to operate in order to run a successful practice.
And the point of that too is, like you're saying, to weed out the bad ones, but to also find those good clients who can appreciate the efficiency of the operation that you're running, therefore will respect whatever price tag, especially if it's a little bit higher than competitors, because they'll see these different touch points. And one of the things that I'm going to be creating, hopefully in the next few months, is the firm builder program. And we definitely want to talk about automating a lot of this, because as we're talking, you're hearing like, send out the checklist, make sure it's complete, make sure it's this, make sure it's that. And, I know Brian's had some experience testing out some platforms in the last few months. There's many of these can just be automated. So you're charging a recurring monitoring fee for something that's going to be automated to the client, and then also automated on your side to say, hey, we've noticed this or we've noticed that. So it's really, that's the key to transforming your practice, is automating as much as possible, finding those perfect clients. And that's going to be different for everybody and every firm, depending on your size and your capacity. But I think that's a major point to speak on, you know. And then there's also ways where you can still monetize, or even just in good faith, to do your checklist. You know, you begin that process, you realize this person isn't the greatest fit for your firm. You have a pool of places where you can send these referrals, you know, maybe partnerships within the CryptoCFOs community, outside of the community, where you could say, hey, this person, because just because they're not a good fit for you, you know, we do know there's definitely bad clients for everybody, but there could also be clients that are not right for you and your situation in the firm you're building, but they might find a home somewhere else.
A great example of that is I just referred something over to Nick Ferrer at Forbes. They're a massive CPA firm, right? There are people that don't care about the price tag, and they just want a really big reputable firm behind them. And there's going to be other people who want, like, who care about the price tag and are going to get, they know they're going to get, maybe they're going to get just as good a service somewhere else, but it's not this big firm. One last thing I want to say about the checklist is that the second you send a really robust checklist to someone who's a degen in this space, who is going to be the highest paying type of client that you're going to find, you're going to immediately earn their respect by asking these questions. They're like the key questions that you're going to be asking. They're going to be like, okay, this person's legit. If you're asking the right questions, you're going to attract the highest value clients, because you're going to show them that you're on top of this stuff, and they will not have that experience. That will not be a common experience for them. Almost all of the people that have been involved with this industry for years, they've probably seen 30 different accountants, and they've tried to find someone that can handle this stuff. And I'm sure that they've gone to multiple different places. And so if you can send them something that shows that you understand what's going on in this industry, you understand the questions to be asking, they're going to immediately kind of be at ease a little bit more, because they can see that they found the right place, or at least that you're going in the right direction, right? So those are the main things that I wanted to chat about here. So this is from the one that we did last year. We went over some questions that we wanted to add to this to kind of make it more, you know, just keep it up to date. This is the last year's one is in the library section of the community. So you'll find a lot of different resources in there. This is one of them. But we're going to be updating it based on the feedback we've gotten in this call for 2024, for the 2023 tax season. So keep an eye out for this. Would love to hear if anyone has any other suggestions for this, or can speak to their experience with clients about, you know, maybe some of the challenges that this could help mitigate. Just gonna leave the floor open for a little bit more related to that.
I think we've created some more work for me to.
Yeah, we always find a way to keep your plate full.
Job security.
Yeah, right. Cool. Well, if no one has anything else,
hey, one thing, just, and this may already be on people's checklists, and it may be not the type of thing you want to include here, and this is not crypto specific, but one of the things that I think is really important, and I think it's super important for people who are just starting out, to set communication expectations, both their expectations of when they want to be available, and also expectations of okay, you know, it's tax season, I'm going to need to be able to reach you. How do I best do that? And that might be on other checklists, but that's one of the things that I think sometimes gets overlooked, and it creates a huge amount of tension in the client relationship. So if you can set your boundaries to begin with and say, I'm not available past, you know, 7 p.m. Pacific time, or whatever it is, and whatever that is for any given person, or I don't want to be contacted on the weekends, or whatever that is. Every person is completely different. That, like, on on an intake checklist, those types of things give the client this, like, it sets your boundaries, but it also gives, I think it also helps the client focus in on, okay, this is when I can reach them. And then they're going to be responsive to me during that time. Because responsiveness sometimes is like the easiest thing. And I think professionals lose track of that.
Yeah. Yeah. That's a really good point.
I think the method is also important. Are your clients texting you on a Saturday morning, or are they sending you Slack messages? Because your process could be, hey, my Slack is always open. You can send me a message, but I'm only available from these times. So that way, if the client does have a pressing matter on a Sunday, they'll send the message. You can choose whether you're available or not, depending on the severity of that.
Right.
So I agree with you 100%, timing that you're available, and then also the methods by which they can reach out to you.
So another thing I wanted to address here that's kind of related but slightly different is that you could have an expediting fee, right? Like presumably you're going to have a lot of options on clients. And so if this is a client that says, hey, I need this stuff done really fast, you could have a checkbox for, you don't want to have like, do you want to be fast priority, medium priority, or slow priority? But maybe you just have a box to check for someone who maybe wants to be like prioritized because they want to get it in by the filing deadline. And maybe you have a surge pricing for that. So it just, we're looking for ways where we can say, okay, this person, money is no object to them. They just want to have this handled, okay, we're going to check the box. All right, our fees go up by 20% for those people, or 50%, or whatever it is. Because we're going to now prioritize that person. So these are just ideas, because there is such a large pool of potential clients here. You can get choosy, and you can get, to the point where you're going to say, hey, you want this done really fast? That's great. It comes with a price tag. Awesome. If that's for you, great. Otherwise, we're going to extend you because we're going to have to unwind all this stuff, and we're going to get to it by the extension deadline. But, it's less of a massive now priority. So,
and it's just good to be prepared with these scenarios. I've doing a lot of work in the graphic design space. That's like the big, every industry has their headaches, but in graphic design, it's like you're waiting for deliverables, waiting. 2 days before the project deadline, they're like, hey, where is this? Like, there's just so many things. And I found people want many revisions, many things. So being prepared now, when I take on a new graphic client, number one, my prices are very high because I'd rather not do it. So immediately it's like, if you're willing to pay, great. Now we're in the game. And then if you want X, Y, and Z, check this box, your price goes up 10%. You want this, it goes up this amount. And you build, like, I think the clients respect it as well, because it's more a la carte. And it does, like Carrie was saying, it sets your boundaries where it's like, if I don't check this box, I can only ask for 2 revisions. Or if I don't check this box, I can't reach out to Brandon after 5 p.m. or, whatever that is. And without you sounding, now you're getting into like psychology, but it's like, you don't have to provide a negative to the client to say, you can't reach me. It's presented in like a positive light. And that does go a long way for sure. And then if the last point, if there is a mistake, you have those clients who didn't look at the clock and didn't realize it's 9 p.m. or something, you can always have those follow-up messages where it's like, hey, no problem, I can answer this question, but next time it's this amount of money, and what I found in my use cases, it stops right there. It's like a hard stop. It never happens again because they know it costs money to move forward, basically. So
I'm sorry, Adila? Is it Adila?
I go by Addie Taylor. You guys can call me Addie, and I'll put that on there.
Okay, perfect. I'm sorry about that. Yeah, I would love to hear what you have.
I'm kind of suffering from the same process. I'm suffering as well because it's tax season. So with my services, they get to get the bookkeeping plus get rolled into a situation where they're able to get taxes done. And I give my clients access to me via Signal because I want them to know that the conversation is encrypted end to end, and that way they can always reach me via text. But with that being said, today, with this season today, if I feel like it's extremely high, than last year. And I don't know why. Is anybody feeling the same thing?
Are you crypto specific clients?
Yeah,
or-
in the crypto
I mean,
space.
everything's booming. So like that. So on one hand, you look at it, your current clients, this is providing a headache. But if you can figure out how to pivot and get all these things in order that we've been talking about, it's just gonna expand your firm to the next level moving forward. And then there's strategies to work on the, we'll call them headache clients that you currently have, to either get them enrolled into a new plan or a new pricing structure, or slowly weed them out through, you know, various different methods.
But also there's a shortage of accounting and tax professionals. So
True.
you're seeing CPA firms closing because that generation is at retirement age now. And also you're not seeing enough new accounting firms coming online. So there's a shortage of CPA firms and bookkeeping services and things like that. And more and more people getting involved specifically in the crypto industry with, you know, the ETFs. There's the interest in the industry is so huge right now that you're going to see more and more of it, I think.
Yeah.
Yeah, I feel I'm a little overwhelmed this year, honestly.
Yeah, I feel you.
And I was thinking about too, and I'll run this by you guys. What do you think about a subscription basis?
Yeah.
Some of my clients, you know, 3 months, 6 months, 12 months. That way, instead of them submitting all of this information at the 11th hour, we have a way where they could consistently get my services, and that way I can extend my services throughout the year for them to be in a better situation so that the books are clean, they're ready to submit, and it's just more, it makes it more, my life more easier, but obviously it would make the client's life a little easier too if they have the accountability. What do you guys think about that?
Yeah, we were actually talking about that a little bit earlier on the call, where with getting your clients, like after you get your clients onboarded, you have all of their stuff in a tax tool or a subledger or something like that, to where you can follow their on-chain transactions, so you can follow them throughout the year. And I think that that's a really good way to upsell your clients, but also have touch points with them so that it's easier to take care, Carrie. It's so that it's easier to reconcile things at the end of the year. Their tax return gets cheaper as well because you had these touch points. So you can advertise it as that, like, hey, this is a subscription service. It provides more security for you for income and cash flows. It spreads that out, and it also allows you to have it be an easier closing on the return as well, because you've been up to date with it. You're not like scrambling to find things. Everything's documented well. So I think it's a really good model to provide to people,
Yeah.
and a good option.
You can
Yeah,
also,
that's what I was thinking about.
also your main service may be, you know, month to month or project based or subscription model, but your upsells can all be subscription model. Your upsells can be, so for instance, you're using Signal. If somebody, your general, let's just for sake of argument say all of your clients get a dedicated Slack channel. Boom. That's like all your clients get that tier. But if they want to reach you by Signal, that's $150 extra a month. And now you're available in a much larger window. So obviously money doesn't solve everything, but if you were getting paid more and you have that residual income, I think it provides a two-way. The client feels more comfortable because they know they're paying for the availability to reach you. Definitely not at all hours and all days, but you know, it's like an open, however you would word that, like an open availability, you know, something like that. But I would like to see firms, especially in Web3, get really creative with the ways that you're adding on these a la carte services and just learning from your pain points. You know, in cannabis, we've spent a lot of time helping people build their firms and understanding these headaches. And the biggest piece of advice is jump on it immediately. Like tonight, when you're done with your work, like make a list of every headache and figure it out now, because it will not get better. It will only get worse. And you need to
Literally, I was going to launch this. I wanted to run it. I was getting off the phone with one of my clients so I could jump in here and then run it by you guys before I do it. I was going to do it probably this week.
Yep.
Go ahead and just launch. Say, hey, I have these subscription services now.
Yep.
If you want to, you know, get ahead for next year, because now this year, either you're going to be filing an extension or you're going to already be ready.
Right.
You know,
I
there's
think you
not
could-
much I could do between a month and now.
Yeah. Another
you know?
model, a different model would maybe be to work in reverse and say, this is my price. But if you're signing up as a client from this month to this month, which is not busy season, you'll get a discount. And then if you're providing, like Taylor was saying, if you take my checklist and you fill it out completely the first time and it's correct, you'll save this amount, or, you know, whatever the creative ways to go about it, because then it allows you to have that high price tag for those that will pay. But then for those that want to be active, more hands-on, and provide you with that proper information, you know, they can see a discount in some way, or just be in control of their packaging, you know, and their plans.
I think it allows the client to be more, like you're saying, be more in control of the pricing, because crypto taxes specifically are challenging and they're expensive, because it takes, if the reconciliation process is left to you as the preparer, it's hours of work. But if you can offload that to the client and then say, hey, we have a different pricing for if you do the reconciliation yourself, and we just go with that and file it, I'll review the reconciliation before we submit it with you to see if there's any major glaring issues with it. Like, let's say there's missing cost basis on a bunch of stuff, so you know they're overpaying in taxes. Let's identify those things. But it's more of a do-it-yourself approach, where I'm helping you as the tax preparer, but you're doing more of the legwork as the client. So if you can provide those options to people as well, you know, you're not losing out on the lower value clients that maybe they become high value clients because now they're doing the work for you, right? So
that makes sense. That was something else I was asked, you know, how could I get, you know, I got individuals and then I got people who are running bots and mining, and you know, it's a lot of and
Yeah.
that's a lot of work.
yeah, totally.
think
So
the
if they're doing the work for you, then
Yeah.
you know.
I think the last point I can make, and I know we're slightly off topic from the checklist, but my advice in this situation, definitely not financial advice, but don't be scared to make these implementations, and don't be scared that, you know, you may lose a client or two, you may not gain a client as fast as you're hoping you would. But I mean, I saw, you can look in the community, you know, we always use like the $5 billion tax prep industry. Sharon Yip did an updated version of that where she's saying 7.5 billion, but like, what'd she say? 1.5.
Yeah, I saw that. That was
Right.
earth shaking.
5 million potential clients
Yeah.
out there. It's like the work is there, and
Yeah.
if you're charging the right amount, you're going to get paid for your time, what you feel is right, and then you only need a few good clients who can do most of the work and just provide you with a smooth operation. And it's like less is more in some cases, you know, and
Quality over quantity.
right. And as entrepreneurs, sometimes when we enter into a new space or we kick off our business, we think like, I'll just charge less and then I'll get all the work. Like if I'm, you know, $50 an hour, I'll get everybody. And sometimes that is true, but then it comes with all the headaches. It comes with all the, you know, you feel trapped. You're at your desk. You can't move on with life. You're missing out with this and that. And it's just, it stops your growth, you know, and it stops you from moving forward. So I'm really glad we had this discussion, because it's
And I
fueling.
want to be like Tyler. I want to be on that island,
Yeah.
just
Yeah,
enjoying
yeah.
life. I love it. I saw that
Right?
picture you posted. That was nice.
Yep.
Yeah. We love life here. It's beautiful in Costa Rica. So
That's
yeah. But you know, we'll all get there. We're as they say in the crypto industry, wag me. We're all gonna make it.
Yep.
Thank you so much, gentlemen. I appreciate you
Sure.
both. Hi, Brian. And thank you very much. That was very helpful. I'm glad I had time to run that by you guys.
Yeah. All right. Take care. Have a good one. We'll see you next week.
Cool.
Yes, you will.
Yeah.
All right. Bye-bye.
Bye.